If NVIDIA invests in a company, does that mean you should too? According to FinTwat Pied Pipers, yes. Investors, and I use that term really loosely here, have been going nuts every time NVIDIA adds or removes a stock from their portfolio. Today we're going to look at a Chinese stock that NVIDIA recently disclosed their holding and also examine some of the recent changes to the NVIDIA stock portfolio. Let's start with the absolute basics, the ground truth, the kesef, NVIDIA's 13F disclosure. So here's a simple before and after, and the first thing you'll notice is that 3 names here are striked out. Let's start talking about the first one, SoundHound. So we published this piece here titled, SoundHound stock is going to crash hard, here's why. And we specifically talked about how the NVIDIA investment in SoundHound meant nothing. To quote from that piece, it's entirely meaningless today, which is why it sits there doing nothing. And that's precisely why NVIDIA sold those shares. And after that 30% drop, investors can now focus on the other points of contention we raised in that piece that SoundHound shareholders ought to be paying close attention to. Now, the other 2 names that NVIDIA exited were no surprise either. So you have Nanox Imaging. That position held by NVIDIA was worth a whopping $320,000. So lots of people have bigger portfolios than that. Absolutely meaningless. That's why NVIDIA got rid of that. Then you have Serve Robotics. We covered that quite recently and pointed to the fact that NVIDIA was holding shares only because of a convertible note. And that convertible note came due, NVIDIA capitalized on it and exited Serve Robotics. Again, all of these positions were to be taken with a grain of salt, as we pointed out numerous times. And then we get to ARM Holdings. So this is the reason that NVIDIA had to start filing 13Fs in the first place. You'll see that they trimmed their ARM position a bit, but since this is a relatively large company, you see the impact on the share price was minimal. Now, some more interesting FinTwat logic appears to be celebrating every time NVIDIA publishes a 13F with companies that we know they were already invested in, like Recursion or Applied Digital. And the logic is that, well, if NVIDIA didn't exit these positions, they must have strong convictions in these businesses. No, they just haven't exited the positions. That's all you should be reading into this. This article from Reuters talks about NVIDIA cutting its stake in ARM and disclosing a position in China's WeRide. They talk about how investors closely monitor NVIDIA's stake disclosures as they can influence the price of companies and provide insights into the growth strategy of the dominant AI chip designer. Well, we'd argue it's 95% influencing stock prices, 5% insights, if that, into the growth strategy of a massive trillion-dollar company that's dabbling in a $300 million collection of shares they happen to be holding. There is no greater vote of confidence than NVIDIA taking a stake in your company, says D. Dick, trader at a firm I won't name because that statement is just so horrendous. That's where you're wrong, Dick. And as we've looked at before, for each of these cases, you need to put that investment into context. So we're going to put the WeRide investment into context today as well. You note here they say shares of Nebius were up 8% after NVIDIA reported they were holding 1.2 million shares. We knew about this last year. We talked about it in a video in December of last year titled, NVIDIA bought this little known stock, should you? So hardly a surprise. Again, everybody seems to act like it's the first time they're seeing this stuff. It just goes to show you what a casino the market is turning into. So when we look at NVIDIA's portfolio, if you will, of stocks holistically, we see ARM with a 45% weighting. Then we go down the list, Applied Digital, Recursion, Nebius, and WeRide there at the bottom. Total value of this portfolio, again, just over $300 million. So when we go back and look at the WeRide F1, so they only had an IPO quite recently, which was late last year. That's why it's cropping up on NVIDIA's 13F. You see here in the WeRide F-Run, they talk about how they've been working with NVIDIA since 2017. Funny, that's when NVIDIA started working with SoundHound as well. They say NVIDIA was an early stage investor. They talk about using multiple NVIDIA products, NVIDIA's Drive Thor platform, NVIDIA's latest Blackwell architecture. So just some thoughts here. Startups may receive funding from NVIDIA, which is then used to purchase NVIDIA hardware. Is this round tripping? Well, I think if NVIDIA set up those companies and did that, then perhaps it would be. Ginkgo kind of does that, right? Or did that in the past. And they, of course, correctly pointed to those being related party revenues. Now, in this case, it seems like NVIDIA has made a lot of investments in the past before AI became this big talking point. And now when these firms go public, NVIDIA happens to be holding shares and needs to disclose those on their 13F because the total value of their portfolio exceeds $100 million. Now, anyone who has NVIDIA on their cap table is probably noticing what's happening here. So plenty of companies are going to want to appear on that 13F, and they'll practically give NVIDIA shares just so they can be on there and get all that attention from investors. And that means that the signal you're getting here is even less meaningful. So let's talk about WeRide a bit. Of course, you see this diagram taken from their F1. So an F1 is just an S1 equivalent for a foreign company. And WeRide, of course, dabbling in all these different areas of autonomy. They talk about having products in trial or commercial operations in 30 cities in 7 countries. And of course, we know it all comes down to revenues, which we're going to look at. Now, when you examine their corporate structure, there's some concerns here around the usual Cayman Islands holding structure. WeRide made it a point to say that they dissolved their VI structure, and then this is in its place. So frankly, this just looks same, but different, as they say in Southeast Asia. So there are concerns around these structures. And when you look at what they're claiming, it's a lot of first for everything. They launched a paid robotaxi service in 2019, so that's had 5 years of service. Commercial production of their robobus, 3 to 4 years of service. Robovan, RoboSweeper, 3 to 4 years of service. They offer key advanced driver assistance technologies, and they're doing this mass production of their state-of-the-art ADAS solution, said to have happened last year. But when we look at these cool products, you have to start asking some questions. They talk about 1,900 days of public access to their robotaxi operations. What does that even mean? How many of these robobuses are in operation? How many robovans are delivering goods? How many robo-sweepers are sweeping streets? And who's licensed their WePilot technology? And of course, what do margins look like across all these offerings? Now, this is a global company, but they're mainly engaging in China, said to be the only firm with testing permits in China, US, and Singapore. Now, when you look at their investor relations page, it's really rough. There's pretty much nothing there. So your first challenge is to start digging into the regulatory filings, aggregating things in a currency that we can all understand, which is the US dollar. So here we've simply charted WeRide's revenues, and it's not looking good. So this year, they're expecting to have revenues decline from last year, and last year was a decline from the previous year. Now, financial data for Chinese companies is not handled very well at all by mainstream data vendors, so you're really going to have to do the math yourself. We've done that here. So for the first half of last year, 2024 is where they're at. They had around $20 million in revenues. Then the third quarter, $10 million, and then suddenly they expect that to jump to $20 million in the fourth quarter so they can hit their $51.1 million in revenue guidance. Now, when we look at last quarter, there's some concerns here. So here you see the US $10 million in revenues. We see they're breaking it down between product and service. So we're going to look closer at that. That's important. But what raises some eyebrows here is the cost of goods sold. Why is their services revenues running a gross margin of just 4%? That's not going to make for a very profitable business. So what we then want to do is take a step back and pull this table out of their F1. And I've simply highlighted the US dollar components of this table so it's easier for you to see the numbers. And we've simply broken down margins for products and services. So intuitively, you would expect services to have higher margins. And you see here how products were increasing over time, but then took quite a dump. And the thing that you may really want to look into if you're interested in investing in this firm, we're certainly not, but this product revenue drop. So that's quite curious why that dropped so sharply. When you look at services, you see a fairly consistent gross margin, at least over the past several years, of around 45%. So their total gross margin, you see, is relatively steady from the high 30s to the mid 40s. They're operating with huge losses, but that's to be expected. Their R&D spend is absolutely massive. When you look at their staff, over 90% of their staff are in R&D. So we really need to start seeing revenues pick back up again. And this statement made in their F1 is very telling. It says, we generated an insignificant amount of revenue from offering robotaxi rides. What, for the past 4 or 5 years, the revenue's insignificant? Also, they talk about robo-vans, which they started in 2023, also having insignificant revenues, and these would be found under services. So that doesn't appear to be working out too good for them. They talk about aiming to begin commercial production of robo-taxis and this readiness for large-scale commercialization this year. Well, let's certainly hope that happens. In the F1, here you see this table where they show units sold of robo-buses, robo-sweepers, robo-taxis. Let's hope they keep providing that in their filing documents, which you're going to have to go to for information because there's nothing in investor relations. So that's something you want to pay attention to. Now, when it comes to the stock, you see that when NVIDIA filed that 13F, shares of WeRide appreciated 83% on the day. So let's calculate our simple valuation ratio. So we start with 2024 estimate revenues of $51.5 million. I didn't use annualized quarterly because their quarterly revenues all over the place. So we're essentially saying this is what they're expecting for this year. We divide the market cap of the company. This is an $8.6 billion company. By those revenues, we get 168. So extremely overvalued. So let's talk valuation. What's a realistic valuation premium for a company with several years of declining revenues? Well, if we valued WeRide the same as NVIDIA using that same method, it should be trading at about $4.50. That would be with a simple valuation ratio, or SVR, of 24. However, if it traded at twice our catalog average of 6.5, so an SVR of 13, then it would trade at $2.44. We'd argue it ought to trade at our catalog average. In other words, there's nothing special about a Chinese autonomy company that's not growing revenues, in which case it would trade at about $1.22 a share. So two things are going to happen here as predictably as death and taxes. First is that fundamentals are going to catch up. That means some massive revenue growth, which is what we're being promised. We're going to need to see that now, especially with this recent bump, this meaningless bump in share price, and when absolutely no intrinsic value was created whatsoever. Or the valuation is going to revert to the mean if they don't improve those fundamentals and start showing revenue growth. So if you're interested in investing in WeRide, I would suggest you set some valuation targets and you stick with them. Now, on the topic of NVIDIA, Jensen doesn't roll out of bed in the morning and go check the FinTwat space to see what hot stocks are being talked about. That's not how NVIDIA's investment portfolio works. Every position NVIDIA holds has context behind it, but not much meaning, as we've shown you. And here's something else to consider. So if NVIDIA's portfolio drops below $100 million, there's no need to file a 13F and all the fun and games will be over. Now, frankly, I think that's the best thing that could happen right now, but in order for that to happen, they would need to sell what? Their ARM position entirely and perhaps the Applied Digital to get that low enough. When it comes to China, we wrote this piece, 7 years ago, and correctly identified a number of ways that China's kicking America's ass in tech. And that's, of course, now suddenly coming to the limelight in the States with things like DeepSeek, which is showing that China actually has some real technical capabilities and they may be underestimated. Now, China's an entirely different animal. I've spent a great deal of time in Hong Kong. I'm a Hong Kong citizen, and I studied a master's degree in finance in Hong Kong, where I did my thesis on shadow banking in China. And I can tell you that is an extraordinarily difficult environment to navigate. And you're not going to do that successfully through a foreign lens. Geopolitical risk right now is at a peak high, so certainly something to consider there. I think funky Cayman Islands corporate structures ought to be avoided. Now, BYD is one example of a safer way to play Chinese EVs and perhaps autonomy as well. We've covered that in numerous past pieces. Whatever makes its way over to the States in the form of an American Depository Receipt or ADR, ADS isn't necessarily going to be best of breed. And just because it's a good idea doesn't mean it's investable. So I think the next steps here would be to evaluate the other Chinese autonomy IPOs that have happened or will happen. I'd ask premium subscribers to raise this on our Discord if they find this topic interesting. We can move that to the front of the queue. We're going to wait for WeRide to float back down to normal levels. I wonder what happens if NVIDIA exits WeRide after that lockup expires. So that's something there to think about. Is NVIDIA going to start using this tactic as a currency so they can say to potential clients, well, give us some shares and we'll both benefit? I don't know, but retail investors need to be ignoring this noise. Don't be tempted to join the casino of utter morons that this market's turning into. Just like SPACs, everything seemed so predictable. Mongo sees SPAC always go up, but SPACs absolutely destroyed retail investors as we said they would. So be very wary of anything that you think starts to become really predictable, like companies going up and down based on what NVIDIA does. And for all the SoundHound shareholders out there, now that you're licking your wounds after the most recent crash, I suggest you look at some of the other potential problems with this firm. I've put up this piece here on SoundHound stock. You should give that a watch next. Thanks so much for taking the time to watch this today.